Hey guys, and welcome to very likely the last weekly outlook for the month of December. We're in calendar week 51, or we're heading into it now, and then we only have one calendar week left in this entire year of 2023. We've been doing these since I think July now, and especially during December we had one very specific target in mind, which was forming a new high of the year 2023. We've scored that with the last week, and we're going to talk a little bit about that. We're also going to take a look at the new schedule for the next week and at the seasonality charts. So stay tuned. Let's get right into it. I also, before we get started, want to announce that we have a special 15% sale going on over Christmas till the end of the year on our VIP membership. I also want to say that there's a 25% discount on the ICT all-in-one. Let's also take a quick look at my current funding pips challenge. I started it or created it at the 6th of December. I started trading on the 7th of December. So that's roughly, let's take a look, 7 trading days here in total. And right now the account is up 5.61% in profit. Most of the trades I've actually taken during these live streams. So, or if not, I at least try to share them as often as I can with our community inside the trade ideas section. So now we're in Forex Factory, only looking at the USD red folder high impact news. We see that on both Monday and Tuesday this week we do not have any high impact news whatsoever. We could take a look at maybe orange folders, but I don't really care about orange folders, to be really honest. I know that every day at 8:30 a.m. New York local time there's going to be an injection of liquidity or volatility when the market likes to print a big green or big red candle, or likes to do some wicks, even if there are no news around. And sometimes even if we have news, it doesn't do anything. So I usually watch out what's happening on that 8:30 candle anyway. On Wednesday we have consumer confidence news, and on Thursday we have the final GDP news report and unemployment claims like every Thursday. And on Friday we get the core PCE price index and consumer sentiment. So consumer confidence, consumer sentiment, I'd say nothing major here at all. We have unemployment claims pretty much every week on Thursday at 8:30 a.m. Final GDP could be something more interesting annualized change in the inflation adjusted value of all goods and services produced by the economy. For the last quarter of 2023, that's going to be a little bit interesting, but I'm mainly going to take trades after the market open anyway, so it's either going to be during the London session or right after the New York market open until roughly 11 or 11:30 a.m. also New York local time. I was just about to record the seasonality outlook into the last 2 weeks of 2023, but unfortunately the tool is right now under maintenance and unfortunately unavailable, so we're just going to take a look at it on Monday's live stream during the New York Yield Zone. Let's jump right into TradingView and take a look at the SP500 CME futures contract on the continuous contract on the daily time frame. Like what I've said before, my main target for the month of December, we started looking at it here on the 1st of December. It was the main target overall for a long time since we saw that strong expansion. But since that main target really has been hit and we're getting closer and closer to Christmas, I'm really scaling down the operation and risking less, especially during London, because the last week's London session performance, or even the movement, I didn't like it, didn't offer many points, so I might even skip London for the rest of the year and only focus on the New York session, because there's usually more momentum and volatility. But now let's get started with our top-down analysis. We're going to start on the monthly. Now let's do the weekly time frame. We don't really have to look at the monthly time frame. That's not going to help us much. We have our levels. We have our low of the year 2023 and high of the year 2023, or at least old high. This would be our new high of 2023. But we don't actually need to see these lines. Let's take a look at what potential buy side targets could be laying above us on the weekly time frame. So we see we already cleared this buy side right here as well. Another weekly high would be coming in at 4819, and then another weekly buy side level would be coming in right here. We have a weekly bearish fair value gap that we could be looking at. That's our highest bearish fair value gap on the weekly time frame before we actually walk up and form a new all-time high on the SP 500. So let's label this buy side liquidity right here, and let's label it all-time high and put it to the right. This is our all-time high. We have our highest bearish weekly fair value gap, and we see that on the weekly time frame we've respected this fair value gap big time. First time right here, and we actually used that to break the slow, and we retraced, took out short-term highs and continued lower from this area again. We see that the weekly candle bodies respected it perfectly, and even once we went into it again during 2023, during the third quarter, we got into it, tapped the 50% and rejected from it, retracing. We already spoke about that, what happened here. And now we saw that 1, 2, 3, 4, 5, 6, 7 months straight up with higher highs and higher lows. It couldn't be much more bullish. And look where we have been rejected. Let's see how precise that was. I think we missed the high of the weekly fair value gap by a couple of ticks, couple of points, not much. But also note that now for that second time, we close above the consequent encouragement of our weekly bearish fair value gap. So really just looking at the weekly here to get a good feeling. I'm not here to call tops. I mean, if we look at the weekly, we only have 2 more candles left. We can narrow down the possibilities of what could happen. We could simply range for the next 2 weeks, retrace. I don't think that's very likely. I think we're going to start doing that next year. Or we expand even a little bit more and take out some more buy side. So I would either be, we're not going to do much more for the last 2 weeks of 2023, or we going to continue to go higher. I'm not calling it just done yet, because every time when you would have tried to say, okay, this is the top, we're going to retrace now, you would have been wrong every time. So just not here to call tops and bottoms of the market. But let's label this also as a weekly fair value gap and extend it over to, let's copy this. Where's it gone? Let me grab this vertical line and put it over here. Q2 is starting in April or March, is that right? 3rd of April. Beginning of April, 1st of April, so that's our first quarter of 2024. So I'm going to drag it out over to here, and this is our weekly buy side target. Let's label it also as buy side. Just going to be doing my top-down analysis the way I would usually do it. Weekly buy side liquidity, top right, and yeah, that's already 12, and we're going to do the same thing here. So we already have our weekly analysis, potential targets that we could be reaching for, measuring it out. How many points would that be? 95 points. I'm not sure if that's really realistic. We're going to take a look at the past months of December during 2022 and 2021 and 2020 to see if we can get some insights of what happened during the last 2 weeks of the year back in previous years. Okay, so we have weekly buy side dragged out, we have our all-time high, we have our weekly bearish fair value gap. I don't really think we need much more. We formed a new high of the year, so be aware. We took out that buy side. I think there is one tiny little weekly bearish fair value gap right here that we might want to draw in. But I think, that's too small for my liking. I'm curious though. Let me copy this and put it over into here. See what it looks like being dragged out. Now where I'm actually think I'm going to leave it on. We used it as resistance twice already. We got into it, rejected, got into it and rejected again. Now we close above it, so we could actually be using this as a weekly support level potentially. Not that it's going to perfectly bounce off this area, but for the weekly time frame I think that's good enough. And it's also lining up with the consequent encouragement of our, let me see, inversion fair value gap. Let's get rid of that middle line of our weekly bearish fair value gap. Visibility, let's put it on the weekly chart. Alright, that's done. I have a little inversion fair value gap. Let's take a look. Higher high, higher low, higher high. So theoretically, on the weekly time frame, this would have been our market structure shift during 21 over to 2022. Market structure shift bearish. We cleared the short-term high right here. Well, if we go to the daily, this would really be the market structure shift. But in terms of a breaker block, I like this candle very much. Look how well it has been respected already. So yeah, I also want to draw in the breaker block that we would have to overtake. Now, we already used that breaker twice and rejected of it even 3 times right here. Once we hit that breaker, we reject it. Retracement to the 50%. So let's see, I also want to have this on my weekly time frame, our weekly breaker block, and now it's disappeared again. Let's show it on the weekly time frame. Now I think we should be complete with our weekly analysis. This is our, no, we don't need that. All-time high, market structure shift, right here during 2021, 2022. Bearish fair value gap paired with the breaker block, we used that twice. And we continue lower. So now our best buy side liquidity based on the weekly time frame would be those 2 weekly highs during March and early April of 2022 to take out, heading further up into our weekly breaker block plus bearish fair value gap. Now the most important part after we've done our analysis is to actually organize it inside our object tree. Therefore you hover over here, object tree and data window. You select the object tree and then you select all your drawings right here. And you then select create a group of drawings. And I usually do it like this. I call it a weekly analysis. And this way, let's say, for example, I want to modify them and I don't want to be able, I don't want to see them. Let's say, for example, I'm on the daily time frame and I have different analysis for the daily time frame. I can simply hide my weekly analysis or set specific settings like not being able to move them if I'm on a lower time frame, or go over here to settings and change the visibility. So I don't want to see my weekly analysis on a monthly time frame. I only want to see it on the weekly time frame, and you can hide it automatically on all the lower time frames. So only if you jump to the weekly time frame like this, you see your weekly analysis. And I think that's really a huge advantage, and I don't think many trading users actually know about that feature. So now looking at the daily time frame and looking at our previous week, still looking at our weekly analysis in here. I don't think we have to do the same analysis here on the daily time frame. I really like the weekly fair value gap and the bigger picture perspective. I mean, we have some fair value gaps here also on the daily, but this just really narrows it down, especially going into the end of the year. So I'm not going to be doing much of a daily analysis. I marked out this daily bullish fair value gap as we cut through buy side, leaving behind a daily bullish fair value gap. I might be interested to see if we can hold support at the consequent encouragement of our weekly fair value gap, and after cutting through buy side, leaving behind an inefficiency, usually I like to see these fair value gaps actually being respected. You can see that we're almost at the high of our weekly fair value gap, so we're going to get more information about that next Friday if we can actually close above that. But I personally wouldn't be expecting too much for the next couple of days that we have left in this trading year of 2023. So let's hide the weekly analysis here. We have our daily. On the lower time frame, I don't really do my analysis because I have the ICT all-in-one indicator. There's a link for it in the description box below. With a 25% discount, simply type in ICT and a 25% discount at checkout will be applied. Let's see, let it load up, go to the 15. Haven't refreshed it recently, so I copy the indicator. And if I go to, for example, the 15-minute chart and hide also my daily analysis, most of my intraday stuff is already done automatically for me. I see my previous day, previous week's high, daily openings, 8:30 open, midnight open, so many different settings. I combined over 22 different ICT concepts and put them all into one indicator that you can easily control and manage from your control panel right here. So you don't have to scroll through all the settings. You just modify them once, and then yeah, you can control everything with those first 3 sections right here. Like you can see, a control panel for market structure, for general ICT concepts like multi-time frame volume imbalances, fair value gaps, power of 3, SMT divergence, kill zone boxes and kill zone backgrounds. Can display the regular trading hours opening gap at 9:30 open, standard deviations, daily open, session liquidity, and so much more. And that's why I really just do my higher time frame analysis. And if it comes down to the lower time frame, I already have all the information that I could possibly need. Once the new daily candle opens, I know what previous day's high, previous day's low is located at. I see my Asia session range. I have my VWAP, midnight open level. Everything's already on my chart. Do not have to worry about that. Do not have to draw orders. And then it really saves a lot of time for me. To save some more time, I've done the analysis now on the daily time frame as well. If I zoom in here, I marked out daily buy side here on the 5th of April. This daily bearish fair value gap right here from the 31st of March that already has been used once to deliver prices lower. And daily buy side here from the 29th of March. You can pretty much pick every daily high here and look for reference. I prefer to only look at the short-term highs. And a short-term high for me is always if we have a lower high to the left and a lower high to the right, like we do right here and right here and right here and right here. For example, this one as well, but we've already cleared that. We cleared those 2 short-term highs. We could really look at this as a short-term high as well, something in between. And then of course this short-term high and those, that's the highest daily bearish fair value gap before we clear the all-time high. And I think if we continue to go higher into the next year, those would be good targets for above at all these price levels. And right here, we took out the high of the year. This is marked with this red line. We cut through it with this daily bullish fair value gap. We have our daily volume imbalance right here that could now be used as potential support paired with this inversion fair value gap right here. And all that is nicely overlapping also with another daily bullish fair value gap. So if we should retrace, I would be interested to see if we cannot find some support around the 50%, which perfectly lines up with this support area. So everything could happen here. This is my daily analysis, and like always, I'm going to put all these drawings that I just put on the chart here into a folder. I'm going to rename it as daily analysis. And that's it. Visibility, I'm going to change it to, I don't want to see it on a minute chart. I do not want to see it on the weekly chart and on the monthly. So I'm going to leave it on the daily and the hourly. And now I can simply, that's a different one, let's put that at the bottom. If I want to see my daily analysis, all I have to do is open the object tree, turn it on or off. And if I, for example, want to see my weekly analysis, I turn on the weekly analysis and I have all my weekly objectives quickly on the chart, and I can turn it on and off as I wish, even on the lower time frames. And one last thing before we end the analysis on the S&P 500 daily time frame is what typically happened over the last couple of years during those last 2 trading weeks of the year. And we see during 2022, all we did was consolidate here on a daily time frame. If you are a swing trader, this might not be the best trading time for you, but on the lower time frames, I'm sure you can land a few good 1 to 5 minute time frame scalps. And that's really all I'm looking for throughout those last 2 weeks, or I will likely not trade after Christmas and the new year, but for the next week, heading into the next week, I'm going to look for a couple of 1 or 5 minute opportunities, but mainly during the New York session. And if we take a look at 2021, we can see that we actually saw a little bit of a trend and still nice moving candles here, but well, starting after the 27th of December, all we did was very, very small range. So let's take a look at 2020. Here during 2021, we still moved. Like I said, possibilities are still there on lower time frame. Maybe not for the swing trader looking for the next 100-point move, but for the scalper, definitely. So now that we're done with the S&P 500 futures contract, let's also take a look at the DXY here. So on the DXY, let's see where we left it at last week. So last week we were looking at a potential market structure shift here, But if you watch the video, I mentioned that I want to see the close on the daily time frame above the short-term high. And we actually never managed to close above it right here. We started out the week right here on Monday. We failed to close above. And then we had a nice new day opening gap, starting to reject. Wednesday, FOMC news event. And then on Thursday, a nice new day opening gap, continuing lower towards where? The optimum trade entry. Right here, if I open up the Fibonacci setting, where do we have it? The 70.5% Fibonacci retracement of this entire range from the low to pretty much the high of the third quarter right here. So we didn't bounce off the golden, we bounced off the 61.8 Fibonacci percent Fibonacci retracement level, paired with this bullish share value gap. After just taking enough sell side liquidity, we pull back, clear a short-term high before making that next move lower. We almost took out monthly sell side liquidity right here on Friday the 4th of August. This would be monthly sell side right here on the DXY. I think we're going to take that. So let's actually take a look at what we have to update on our DXY chart. So I'm not interested in that anymore. I don't think we are going to use this anymore. So let me get rid of those lines. We have our bearish value gap up here. I think I'm going to leave that. We took out that sell side and then we started to retrace. And right here on this Thursday, we got a very bullish candle, leaving behind a new inefficiency, closing above 2 inversion fair value gaps. And at this point, it was pretty easy to see, okay, we have a inversion volume imbalance and a inversion fair value gap plus a bullish fair value gap. We used it as support to continue to deliver into our next daily objective, short-term high with a lower high to the left and a lower high to the right here on the DXY. Consolidated. We didn't really respect this inversion fair value gap, but well, in some sense we still did. We have a higher high, higher low, higher high on the daily time frame. It's just a little bit trickier to spot. So this right here would also be a market structure break heading lower. After this daily candle closed, we also left behind a volume imbalance. So those areas, I know we have used them. We don't need them for further reference. I'm gonna leave those ones up here on. I'm interested in this inversion fair value gap right here. So a old bullish fair value gap, the lowest daily bullish fair value gap before we take monthly sell side. This old low can also now old support. We broke through that, could now be used as resistance. And this volume imbalance here on the daily, this little gap. Let's use the middle line and make it black. Alright, so this daily volume imbalance, the inversion fair value gap, this old low, the retracement level, I'm going to leave it on here. We still have more sell side to clear. And look at this, that's what we call a balanced price range. So we have this old bullish fair value gap and we use that to hold support. And look at that, how perfectly we've respected that area. We close right here, we open up right here, and that's where we started to bounce away from. So now that we cut right through it, what do we leave behind? Right at this area on the daily time frame, right? A inversion, a bearish fair value gap. So I'm really interested in that area heading into the new week. We also have another bearish fair value gap just above, right here. So we really have some major resistance. If we look at a potential retracement level, let's say for example the 50%, we could easily retrace into that. We don't have to. We would understand why price would want to reject off this inversion fair value gap, old low, paired with a bearish fair value gap, paired with a volume imbalance. But if it wants to continue higher towards the 50% again, we could also be looking at this inversion fair value gap, which has been used as support before. Now we cut through it, lining up nicely with the 50% and the consequent encouragement of our bearish fair value gap here. And I think those should be enough areas where price could likely reject. If not, we could also mention this as a breaker block. We form a short-term high, short-term low, and a higher high right here. We break that, so we look at the down closing candle right here. This would be our daily breaker block. We can also leave this on heading into the new week. But for me, my eyes are focused on August low sell side liquidity. There's no other daily bullish fair value gap here. Maybe a tiny little one, but I'm not gonna draw this one out. Let's check out the weekly time frame. As most of it's updated right now, we hit the weekly bearish fair value gap, and very nicely we rejected from that. We also closed below this weekly bullish. Yeah, I would really be targeting this weekly bullish fair value gap here below the August low sell side. It's going to be my target. We just rejected our weekly bearish fair value gap here, continuing lower. Let's see if we continue at the end of the year or if we reject again. But I think this should be a very good outlook into the last 2 weeks of 2023. And let's call this weekly fair value gap. So we have all that on our chart. August sell side, our area of potential resistance, and yeah, so area of interest where I would be interested for shorts, definitely right here. We could retrace higher, so always keep that in mind. 50% retracement level, but if you get a 2022 setup within that area, I'd give it a higher probability or maybe some more risk. And yeah, that's really gonna be it. And merging that over to the Euro-US dollar futures contract chart here, also on the daily time frame. We've been looking at potential, well, at least for the short to medium term, higher prices on the DXY. Actually, we also have SMT divergence here. I just realized that. Can see that on EU we formed a lower high here on 6E, and on the DXY we formed a lower low. They're inversely correlated, so if we see a lower low on the DXY in a perfect scenario, and basically 95% of the time we see EU forming a higher high. We don't see that, so right here we have daily bearish SMT divergence. So that's going to be really interesting. This is our buy side target right here and our previous week's high. So if we're correct and the DXY is going to reject out of somewhere between 103,489 and where we are at right now, 102,652, to continue lower to take out August sell side and fill in this weekly fair value gap, then I would be looking forward for EU to bounce off this bullish fair value gap, overlapping with this old bullish fair value gap right here, to continue to head into buy side. But once we start to fail to hold this and go below this short-term low here from Friday the 8th of December, well, I think price might want to continue low again, take out this short-term low, those relative equal lows right here, and maybe again the low of the year of 2023 coming in at 1.05295 roughly on EU. So this is going to be a make and break if we want to continue higher, but that really depends on what the DXY is up to. If the DXY is rejecting, heading lower to its low of the year 2023 right here during Q3, then obviously the Euro-US dollar, or the euro, is going to appreciate in value measured against the US dollar. And there we have it, the likely last weekly outlook for the trading year of 2023. Now it's time to prepare and get ready for the new trading week. If you even decide to take any more trades, or if you're just taking some time off, getting ready for Christmas, buying some presents, or just enjoying the festive holiday. If not, then well, I will likely see you on one of my New York session live streams, either on YouTube or for the VIP members on Discord. And I just want to say it one more time. We have a 15% sale going on until the end of the year for our VIP memberships right here. The link for that is in the description box below. Simply use the code VIP15 in capital letters. Alright guys, thanks very much for joining in. I will see you next week, right on Monday, for our New York session live stream. Bye.